Welcome back to the Accounting Working Group podcast. I'm your host, Stein Smith, and I am really thrilled to be back here with a fresh episode as all of us try to come out of the weeds and the chaos of this past income tax season. I am happy to be here with you, basically trying to catch up on things and really trying to, catch up on the headlines that have been going on during the last couple of months while all of us have been very, very busy, but also to try to really focus in on and to point out a handful of ways that all of us can, one, be up to date on these things, and two, have productive and ongoing conversations with our internal colleagues and external clients on these topics going forward. So, as I'm sure all of you, have heard previously, this first quarter of 2024 has been very intense for any sort of tokenized assets out there. Any tokenized assets, crypto assets, digital assets, virtual assets, no matter what name or label is currently being used right now. Um, there has been quite a bit going on in the space. And obviously the main headline story has been the in January, the approval and the trading of 11 spot Bitcoin ETFs. And while all of that at this point is, I would say, relatively well understood news, it is still a topic that I find in ongoing conversations with people both in and out of accounting and tax that they aren't really quite sure as to the implications of this move, right? That most people that are interested in crypto or have an eye on the markets have heard of this, but really don't quite understand the current impact and the medium to, let's say, longer term implications of having products like this out in the marketplace. So it's always, I think, a opportunity to go over again either internally or externally, sort of with your uh, uh, either colleagues or your clients, to walk through sort of what the ETF products actually mean, and then how that's opening up different avenues for investors who are interested in perhaps buying crypto, either at the enterprise level or at the individual level. And and it's also worth highlighting that as these products were only approved to start trading in 2024, that all of the trading, all of the gains, and all of the nuanced tax implications of having a ETF that has Bitcoin as the underlying asset, which I won't go into all of those items here, but it's worth doing your own research on those sort of nuanced items in terms of how the ETF pays for management fees using partial Bitcoin, and then how those capital gains or capital losses are allocated out to ETF holders, items like that. So, and all of those questions have not been talked about yet. Why? Because all these products were only authorized and only started trading in 2024. So all of those questions are definitely going to be top of mind uh, at the IRS and for any other crypto-linked tax software company for the 2024 tax filing season. So it is, I would say, a excellent idea to start having these conversations. Probably not right now, but during the upcoming month or so, to just make sure that everybody's on that same page and everybody is aware, that even if they're buying the ETFs and they're doing so prudently, that there are going to be tax implications of doing so if they are conducting transactions or otherwise buying, selling, trading these ETF products. And on top of that, right, there has been quite a bit going on in terms of the SEC, right? That everyone's favorite uh, oversight agency here in the U.S., the SEC, has been quite active, as has been the unfortunate norm under SEC Chair Gary Gensler, that he and his commission have been trying to pretty much create law in the courtroom, which is obviously short-sighted and absolutely counterproductive to trying to create a opening and entrepreneurial environment here in the U.S. But but a few things that have come out that are kind of connected to uh, the income tax angle on this too is that overall, be it traders or investors that use centralized operators like Coinbase or use DEXs or use other protocols like the Uniswap ongoing case right now, which in April 2024, the SEC filed a professional wells notice against Uniswap Labs. So all of that is a concerted effort by the SEC to one crack down on pretty much any company, as again as has been its sort of normal operating mindset to crack down on companies in this space. But but there are also sort of more pointed items or more pointed objectives, right, that are being evidenced now, meaning that the various regulatory agencies, the IRS, the SEC, the OCC, OFAC, all the rest, are really after customer and trader information, right? That's a pretty obvious point and purpose of these efforts, right? To one, to collect taxes and to ensure compliance. But it really is about information and to try to create one sort of what's the centralized data base or hub to collect and to analyze customer and trader data. And all of that goes directly hand in hand with the upcoming changes to IRS Code Section 6045 uh, and 6050I, both of which have other aspects to them, but both of which are directly connected to trying to get more information out of the taxpayers and hand it over to the IRS and or other agencies, be it FinCEN or other possible bodies as they firm up how these rules are actually going to be implemented going forward. But either way, there the odds are that if you have either clients or internal colleagues that are interested in crypto or have gotten into crypto more so in this first quarter, that the odds are of them being aware of these changes and the implications of these changes on their record keeping compliance obligations and then having to track individual units possibly um, is our opportunities to have those proactive conversations now, right? Because ultimately, the whole point of us collectively being up to date as CPAs working in corporate accounting, tax, audit, advisory services is to be able to one be educated and to two have our clients be better educated as a result of having us as their advisor. And I mean, there has been no shortage of other headlines and other news out there linked to crypto, be it the sort of rebirth of the NFT space. I know a article was on Bloomberg for a while. Hivemind Capital has raised a whole new fund to invest directly into NFTs, and that the efforts towards greater adoption of privately issued stablecoins are beginning to make inroads. I do know that a member of our working group, David Pope, has been kind enough to offer us insights into the efforts underway out in Wyoming, to issue their own stable token. So there is quite a lot going on in terms of how the asset class overall is developing and maturing. But as that happens, and as more institutions, be they large firms on the street or more entrepreneurial clients out there, as there's more adoption of these tools, there's absolutely going to be more questions and more opportunities to help with compliance and advisory issues. And so as we sort of uh, work through all of those issues, right? Because there's going to be plenty of tax issues going forward as we wrap up 24 and end into 25. There's also the upcoming Bitcoin halving or halvening. I'm never quite sure how to say it because I've heard it both ways and I've seen it written both ways. So if anybody has any strong comments on that, my inbox and DMs on Slack are always open. Um, but all of that is also a opportunity, right? Because I'm sure, and it's currently forecasted to happen at some point during April. Uh, so it's an opportunity for us to educate again our internal colleagues and uh, external clients on these matters, right? So okay, so there's some headline conversation on this topic. What does it mean? What is it? And then ultimately how it's going to impact price and market dynamics going forward. And there are some analytics out there that overall in the three previous halvenings or halving uh, events that the price of Bitcoin at the end of that year was higher as opposed to what it was at the time of the event. And there are other analytics based on miner output, miner profitability, and a hash rate growth, to only name a handful of them. But it is going to have a impact. I would say that all of that is relatively clear at this point. So it ultimately comes down to how do we handle the headlines and the conversation on this topic, most of which I'm sure is going to be full of at least partially incorrect data. So how do we handle that? And how do we help our clients better understand what this all means? And from a purely accounting and a tax point of view, if there is a dramatic change in the price of Bitcoin, either up or down after the event, how long is that going to be, right? And how much of an impact is that going to be? And how do we help our either colleagues over in Treasury who possibly have allocated some funds to Bitcoin, or our external clients who are coming to us for tax planning uh, uh, conversations? How do we help them sort of navigate any of that price volatility as a direct result of this event? And ultimately, as in every or well, as in every and any bull market, there are always times, there are always cases where, um, as the price goes up of these assets, there is always a uptick in the occurrence of hacks, of other breaches, and just unethical actors trying to ride the wave and to take advantage of of this increased interest and investor dollars going into crypto. And I would just say that anecdotally, that there are more people casually interested in crypto and casually investing in crypto as opposed to past bull markets. Now, in the uh, Bitcoin Twitterverse, or now X.com verse, or on Reddit, we haven't seen the bubble and the froth yet, but anecdotally, based on any number of research surveys done by FINRA or the Pew Center, that there are tens of millions of Americans who either have owned crypto since 2021, or who have owned, or rather who own it now. So either way, right? There are going to be people, and there are going to be entrepreneurs, and there are going to be uh, enterprises that are still new to Bitcoin and are still new to tokenized assets. And so it's a prime opportunity to again sort of brush off those documents and training uh, pamphlets on hot wallets, cold wallets, multi-sig wallets, private keys, public keys, seed phrases, and all of that terminology. Because I found that in conversations, be it with individuals or with institutions that are trying to implement crypto on that enterprise level, or are trying to sort of build it out internally, that a good chunk of the confusion and the anxiety on this topic has to do directly with the terminology used. And ultimately, as all of us, collectively come out of this tax season and go into the more planning, uh, advisory phase of the year after a well-earned break. But as that happens, it's always good to keep in mind all of the headlines and all the changes that have been happening during tax season, and that our clients might have heard about, might know some about, but I always feel that it's a good thing to sort of come back to these issues, talk them through, and to help our either internal colleagues or external clients sort of work through these issues, understand them, how they work, and then understand sort of how it's going to impact them going forward. And as that pertains to a cyber conversation, just walking through how to develop sort of a wallet policy, a wallet access policy, and then how to have conversations with the insurers, either either for the entity at large or for the assets held um, on the books of the company, is a prime place to start. Again, not only the educational process, but to also be a true advisor to our clients who are trying to implement and trying to grow out these entirely new business areas. So as always, there's never a dull moment in this space, and I am happy to be back with this brief sort of update, look ahead based on Q1 headlines and topics. And now that we're in the after tax season timeline, we are going to be back at it each and every month. And as always, if there are any of you who are either tuning in now or have colleagues at your firms who are interested in appearing on the podcast as a guest, please do email me or DM me on Slack, and I'll be happy to have you on. Thanks. Have an awesome day.